So Graham, I'll put you on the live screen right now to kick off.
So Michael's kicking off.
Oh, Michael, great. Okay, wonderful. Michael, you can kick off and I'll work on getting Adam.
Sure, great.
There he is. Go for it.
Okay. Great. Everyone, welcome to the Changing the Game mini masterclass today. I want to thank IQPC for hosting today's session, and a huge shout out to Emma Hodge and the IQ who do an incredible job. So the catalyst for today's masterclass is a forthcoming playbook on business transformation called Changing the Game, which Graham, Christie and I are launching globally with Wiley later this year. So Graham is one of these incredibly talented individuals who is just, you can learn so much by working with him. And so I've had the great privilege of writing this book with Graham. And so between the two of us, we have international corporate consulting and startup experience. We've advised and led numerous business transformations and built up a wealth of practical knowledge. And what we've discovered in the years of doing this work is you can really stack the odds of success in your favor. And the right approach, the right knowledge, the right tools, all of this can make an enormous difference. So until we wrote the book, we found that a lot of these things were hard-earned lessons, and they were not really written down in one place, but learned through years of experience. So in a way, we wrote the book that we wished that we had. So I'm just going to, we've got a presentation, some material to step you through, which I'll just bring up on the screen. So you should be able to see that. So the topics that we're looking to cover today, by the end of this 45-minute session, we'll have covered three things. Firstly, you'll see why business transformation is relevant for all companies and situations. And secondly, we're going to share with you a high-level approach that you can use inside your own company. And lastly, you'll hear from our esteemed panel, where Graham and myself will be joined by Adam Warden and Neil Robinson, two senior industry leaders whom I greatly admire and respect, who will talk about some of the key things from the book. So very briefly, I wanted to touch upon why companies need to transform. So there's two groups of companies here. And if you take a look at these, the key question is, well, what do they have in common? And group one all entered the Global 500 ranking in the last decade. And the second group there, Group B, have all exited the ranking in the last decade. And when you look at the business landscape, what you'll see is that very few companies can sustain success for any length of time. And in fact, one in three top 500 global companies today were not on that list a decade ago. So you're seeing a lot of churn in successful companies over time. And research by a guy named Richard Foster from Yale University identified that the lifespan of top companies has reduced from 67 years in the 20s to 18 years around now. So things are moving faster than ever before, and change is inevitable. So if companies are going to survive for any extended period of time, their leaders, people in the organization, will need to be excellent at managing change. And I think it's now fast becoming a vital aspect of any manager or executive career. And it's not something that is just the job of the vital few either. I think leaders at every level of the organization need to be able to shape and lead fundamental change. So many people listening today will have worked for a few different companies over the course of their career. And you'll know that no two companies are the same. However, when you're looking at why companies need to transform or change, you might not start to notice some common patterns. And so what you'll find is that most organizations at a high level of abstraction really fall into one of three categories. And so when you're looking at what sorts of patterns companies may fall into, the very first is really where companies are struggling in terms of cash, managing a lot of debt, and this is really a classic turnaround situation. They may have issues in terms of securing access to credit or further funds. The second category that you might expect to see is where organizations may have a long-term trend of below expectation sales or profitability. And they may be missing sales targets or company goals, and that's an established pattern or trend. And many organizations find themselves really in this category. And then the third group of companies are organizations where the strategy that they have in place is not going to enable them to be successful going forward. They need to reinvent themselves. And so they may be successful today, but they'll need to ensure that their strategy sustains that winning market position and build capabilities required for tomorrow. And so each of these, and we've spoken today about the concept of a crisis, and this was something that Wen talked about in her presentation as well, and how COVID has really been that platform. Each of these will represent an organizational crisis, whether it's a cash or liquidity crisis, whether it's a profitability crisis or a strategic crisis. So looking at how you might take action in your own company, I'm going to pass over to Graham, who's going to step through some things that you might be able to apply in your own organization.
Thanks, Michael. So thanks, Michael. Look, let's firstly look at actionable change for an actionable framework for transformational change. Essentially, what we're trying to do here is close the gap between where the company is today and where the company aims to be in the future, and that really is bound by a couple of dimensions and significant ones. One is obviously, what is the reach of that transformation? How bold is it? How fundamental is it? And also, what's the time that's going to be allocated to doing that? And options for that change to go from A to B, in the book we've researched heavily, we feel fall into three main buckets. One is around deliver growth. And so obviously that's areas around focusing on where the real pockets of growth are going to come from, maybe double tapping on some existing high performing areas. It could be around new product development. It certainly could be around galvanizing the sales force and reinventing that for more effectiveness, or it could be around expanding into adjacencies or diversifying slightly. So that's really kind of the top line growth agenda as an option. Then there's cut costs and manage profits. And I think this is probably an activity that all businesses have been embarked on quite significantly over the last decade, and particularly over the last 12 months. So that's obviously areas around cutting overheads further, maybe reframing procurement into a more strategic zone, around sourcing. It's certainly around re-engineering some of the business and digitizing ways of working within the business. And it could include things like outsourcing certain aspects of the value chain or the value delivery. And then the third area is around building capability. So pursuing functional excellence in the areas where real differentiation can be created and is already some good corporate muscle in. It could be around redesigning the operating model in part or in full. Almost always it's around looking at talent and looking at the performance of that talent within the business and seeking to manage it more optimally. And obviously today there's been quite a bit of talk around a reset of culture and values. The role of strategy, therefore, is to narrow the range of options between understanding one, where the company should operate in terms of market segments and products, and how the company should deploy the assets and the capabilities that it's got to meet often the needs of customers better, and obviously vitally to increase and outperform competitors. So both the where and the how is fundamentally the focus of changing the game. If we think about core areas around transforming a company, it's as much about whether it's a company, a division, or a team, and there can be it's an enormous undertaking of the multitude of people we've spoken to in creating the book. It's no small thing to undertake even a modest transformation within a business. And we know that management statistics cites something like 70% of business transformations fail. And although there's not always empirical evidence of that, I think it's fair to say that we all know that ourselves, that deep-seated change is hard. And I suspect this group in this summit today feels that day in, day out. So drawing on leading practices and the lessons that we've learned over time from really global leading executives, we think there are several principles that we now place a lot of importance on within the framework of changing the game and applying to the book. First of those is, and it's been talked about today, and it's absolutely critical, is build a solid foundation. Ensure the situation that the company is in is honestly and authentically well understood. Align the organization and the key individuals and ensure there's funding and resources. And to do that often takes the ability to also, in parallel, achieve some quick wins that builds confidence and credibility. Set clear aspirations is a second point. So define a clear destination that really resonates, that involves and engages with many, if not all of the people within the organization, and connects with them on a personal level. Base action and strategy. Develop a balanced portfolio of initiatives that align to the aspiration and recognize that not all initiatives will succeed. It's okay for some not to succeed, but have a portfolio of small, medium, and large initiatives. Mobilize the organization for change. So really be effective around communicating the why, and take time to really hone that ability to communicate that well. Remove obstacles early and often, and don't be afraid to create incentives around change, and have quite an appetite and an energy to continuously promote it. And then lastly, systematize around what those defined solutions are, and be really clear around the ownership of the initiatives. Make sure those resources are there, and drive and build some muscle around being able to monitor that progress. So in addition to applying some of those principles or all of those principles to your organization's transformation, the right strategy can lead to enormous difference in economic outcomes. And, I think most of us will be familiar to a degree with the case of Kodak versus Fujifilm. But I think it's interesting to dwell on it just for a second within the context of this session. Both organizations, as we know, faced market conditions pretty similar at the same time, as profit pools were shifting away from cameras and film into more digital alternatives. And Kodak at the time focused on preserving its profitability, in a sense chasing profitability and denying the oncoming cliff face, perhaps. We were doing that in a declining market that showed no signs of changing. They made a late entry into the highly competitive digital photography market, but their product lacked differentiation, and neither were they competing on price. So really chasing the ambulance, I think. Over the same period, Fujifilm adapted and explored the application of its technologies, which were enabling their current range of products. And they really explored what those capabilities were. And they looked at adjacent markets, pursuing a strategy of diversification. And Fujifilm set out to utilize this know-how to find new markets where they could compete more effectively. Despite facing the same challenges, therefore, these companies has, as we can see here, very different ultimate fates. So how do you get from point A to point B to create this dramatic shift in performance? Well, the integrated approach to business transformation, we have really hard baked into the book, and really is essentially the DNA of it. It is across 5 stages. Let's walk through each of these and describe them. The first of them is to take stock. Now, this is about assessing the company and its operating environment to identify and prioritize areas for focus. Here, the leaders need to ensure operational and financial stability and build genuine credibility through the quick wins that we've talked about. And they have to lay the foundations by creating and mobilizing a top team, which takes time often to find, and are all important in change for change. The second stage is around creating a mandate. This is really where leaders establish the common view of where the company is today. And I would emphasize that needs to be open and honest, along with the opportunities and challenges faced. This is then used to build an objective base case of where the company is and where it's likely to go if the status quo continues. 3, mapping the journey. At this stage, leaders need to focus on creating a compelling vision for the future and really selling that vision internally. It's used to establish a common direction, a shared sense of purpose from which to explore certain strategic themes and initiatives, and not being afraid to explore and then return back to base camp. And then ultimately commit the organization to a plan of action towards this newly imagined future. Mobilize. So we're moving through planning into mobilization phase, and this is where a lot of the clear communication around the detail needs to happen. So a clear communication to all of the company, its employees and stakeholders, removing obstacles, creating those incentives, and continuously promoting change. And it's round about this time that typically a central organizing entity like a transformation office or something similar is formed to help coordinate those efforts. And then execute and track. So obviously this is where the rubber hits the road, and this is where leaders have to be able to empower their team to develop really detailed, very specific solutions, assign those areas of ownership, establish the routines, and monitor the progress that will make the difference, review cadence, and also create some root cause troubleshooting. In terms of taking an organization on a transformation journey using these 5 stages, they don't need to necessarily operate in parallel. They can operate in parallel. You do not need to be strictly sequentially delivered. I think that's close to the reality of most businesses. As you can see early on, the emphasis is on understanding and gaining a realistic hold, planning, and then building a roadmap, and then progressively focusing on the execution. With that, I'd like to invite Adam and Neil onto the panel discussion. And let me start by introducing them. So firstly, Adam Warden. Adam is a global transformation executive and former senior partner at Bain & Company, who has worked extensively with boards and CEOs to drive strategy and execution in large, complex enterprises. During his career, Adam has led several company turnarounds and advised many companies on their transformation, including Rolls-Royce, Ansett, Willis Towers, Watson, AXA, and most recently Fairfax Media. Adam's career has included balance sheet restructuring and acquisitions, strategy development, and the execution of multi-year transformations, which has enabled companies to achieve significantly stronger balance sheets, improved operating cash flows and margins, whilst contributing significantly to increased shareholder value. And also Neil Robinson. Neil's an accomplished sales and marketing executive with over 2 decades of experience leading the growth agenda inside media, content, and marketing businesses in Sydney, New York, and London. He has led the growth agenda in both large listed corporates and innovative startups, overseeing existing revenue streams and employing diversification strategies to develop new and sustainable sources of revenue. And most recently, Neil was responsible for News Corp's digital growth agenda as Managing Director of Digital Solutions. Adam and Neil, thank you for joining us today. Not at all. So just a quick a quick kick-off question. So one of the themes in the day has been around as crisis as a catalyst for transformation. And obviously, crises are not an uncommon thing in businesses, and executives have been facing them for decades. So is COVID-19 as a catalyst for transformation really any different? Adam, I might go to you first.
Graham, I mean, my view is that it is, but it really depends on the industry and the company itself. So some companies, like in travel, leisure, etc., hospitality, are really hard hit, and they're having to take some dramatic short-term action. You know, you mentioned in your sort of 3 stages, the short-term bloody crisis. You know, they're in that stage of transformation when they have to do some short-term things to stem the bleeding. You know, whereas others, for example, in retail, which has been undergoing a long-term transformation and sort of rolling crisis, as it were, are needing to automate supply chains, move more online into a digital era. You know, Fairfax, you mentioned earlier, has News Limited have to move more into a digital era. So they've been undergoing some sort of sense of this crisis already, but obviously COVID has added to that and accelerated it.
Neil, would you like to pick up on that point?
Yeah, thanks, Graham. Look, in principle, that no different. That would be my first take. But there are 2 significant things that are, and sort of Adam just alluded to it there. The sort of velocity of change, or the need for change, for transformation, is highly evident. And then secondly, the optics of that change is particularly significant. And what I mean by optics is there's the necessity to transform is really, really visible, very publicly visible. There's almost permission to change by loads of cohorts, including employees, which is a good thing, and acceptance to change. And then that in itself removes some of the resistance to change, I think, or on the positive, it allows a leader to identify the change agents within the organization to move through that change. So, look, I think it'd be obvious to say that many businesses right now in this particular crisis are making some quick changes. I refer to it as under the cover of COVID, where businesses perhaps have either been too conservative or possibly too weak in their leadership to actually push through the transformation. They're using this very public crisis to actually push those changes through. And what I'm really interested in observing is obviously whether or not just the cost-cutting element of transformation occurs, but whether the human element of power structures and also sort of incentive reward is also changed at the same time to make sure KPIs are really shook up at the same time.
Can I ask a question on that, just as a follow-up, Neil? So do you think that there may be a tendency, if I think about those 3 options that we talked about in terms of deliver growth, cut costs, and build capability, that COVID may be used, as you say, as a sort of an agent of stealth to really double down into that second area and not have balance within more of the growth and capability build areas? Yeah,
I think that sounds right, but I would caution to not look at capability at the same time, particularly, if you're getting future fit, and that's what transformation is largely there to do. You have to make sure that the right kind of sort of capability structures are there, and the incentives to actually reach that transformation goal are also really, really clear.
Graham, can I just add to that? I mean, your point is 100% right, Neil. And if you look at the earnings results right now in the US in the earnings season, earnings surprises across the board, and so that is largely due to operating leverage improvements. And the operating leverage is achieved through aggressive cost cutting. So they're using COVID crisis to do cost cutting in areas where they otherwise maybe wouldn't have entered before. So the unions are unable to resist under the guise of COVID, and they're able to do things which otherwise they wouldn't have been able to do. So I think there is a very strong focus on the cost cutting right now. But I think you're right. Organizations that don't balance that and look at capabilities and sort of overall market strategies, etc., are going to fail in the longer term.
Well, have you got a view?
Sorry, you broke up there, Graham.
We'll press ahead. Michael, are you with us?
Yep, I'm here.
Do you have a view on finding that balance between those three areas and perhaps where Adam was going in terms of not being too focused on the short term because it'll end up tripping you up in the medium to long term?
No, I think that's right. And one of the things we cover in the book is that you need to have a balanced strategy. People don't get excited about just cutting costs. It's very, very hard behind that. And so, you should be looking at what can you do to drive growth, look at cost, and also building capability. I think the other thing is that, because one of the questions you had at the outset was, is business transformation during COVID any different? And I think if you take a step back, companies, they move through cycles. You sort of got industry life cycles, and in that sense, the pattern that companies follow when you go back, it's not too different today than what you might have seen, say, during the GFC. In terms of company impacts, while the trends within organizations and the interventions may need to be specific and they'll have to be tailored by industry. I think what we've tried to do in our playbook is make sure that we're presenting a guide and a playbook for executives that's going to be as relevant today as companies are going through COVID as it will be for the next crisis or for the next sort of strategic transformation that a business is going to undertake. So to answer your question, in many ways, I think many aspects are similar, but there are also some differences that will require a tailored approach.
In the book, we talk about solid foundations, and solid foundations has certainly been mentioned by a number of sessions today. I'm interested to understand from yourselves about where you personally feel executives should start when trying to figure out how to create the best possible solid foundation. Michael, I might start with you this time around.
I think so. Referencing what we've covered in the book, the first thing we talk about is taking stock, and that's really how do you go about understanding the organization, the issues, the opportunities within the organization. It's about setting up a team and resources. It's about building credibility and really orienting yourself in the company. So it's all about preparation. The second thing we then talk about is creating the mandate, and that's really about building that case for change. And so when you're building that case for change, you're really looking at what's the performance of the organization. Historically, you're looking at what's contributing to that performance. Which parts of the organization are driving that result. You'll be looking at things like how costs are changing in the organization. Cost structures. You may also be looking at any sort of existing management plans. So you really need to develop a good understanding of what's going on before you then formulate your strategic vision. So all of those things are critical. And if you're not, if you're not set up properly at the outset and you haven't really prepared yourself and you're not building that case for change, if you're just launching into execution, that's really a recipe for disaster because you don't know where you're going. You've got no sort of end goal in mind. So I think that's incredibly important in terms of setting yourself up for success.
Neil, where do you look for first in terms of to pour your cement to build your block?
Well, look, I think on the call, you've probably got lots of different people attending from different sort of profile businesses, whether it's startup, scale up, or enterprise. So the first thing I'd probably say is that I look at the same thing regardless of profile of business. And that I start with a very human element, and it's not to be taken on its own. It obviously needs to be balanced with a financial sort of overlay or metric. But I look at doing very much in the frame of taking stock. I look at some kind of audit, which is an assessment of the growth capital that exists within that enterprise or that business. And this is largely through the adaptability lens. A lot of people talk about IQ and EQ, but I really like to focus on AQ, adaptability quotient. And this is something, I think that can be done without a huge amount of cost. It's not perfect science, I'll accept. But, if you spend time talking to people within the organization around a number of different things, I think you'll get a very good sort of baseline. And the three areas I'd sort of focus on are, first of all, that people and I'll be looking basically at what kind of behaviors are enacted by people within the organization. Do they possess or do they demonstrate the behaviors around a growth mindset or a customer obsession or even problem solving, and are they solution oriented? Those kind of things can be gleaned through sort of one-to-one interviews, that kind of stuff. And then I look in people, what kind of structures around those people to look at the possible risk of social capital being eroded through transformation. And that gives you a good line on people. With culture, again, through a series of sort of interviews, you're looking for a dominant theme. And this is what you have to look at is kind of language. Is there a customer-obsessed language in my mind? Is there humility? Is there trust? Quoting the Google Oxygen sort of project about psychological safety. That's really, really important to get a gauge on culture to see whether that business can transform or not. And then lastly, the binding cohesion is those practices, structures that exist that bind behavior with the output. So look, functional alignment, KPIs, joint KPIs, communication tools, forums, even things like in town halls, do people ask questions? Those are all ways of which actually you can take stock and actually build some solid foundations regardless of the enterprise or business size.
Yeah, absolutely. Adam, from your own personal perspective, where's the first place you look?
Well, I have a sort of a top-down approach to this. Most of my transformations have been sort of board-level driven transformations. And for me, the foundation has to be at the top. So, Neil talks about building a strong foundation in the business, but I tend to look at it as being absolutely critical that the top knows what they're doing. So you look at the successful transformations, that's driven by a strong CEO and board. So you look at someone like Rolls-Royce as an example. Peter Ward, when we started there all those years ago, he said, look, all I need to keep is the guy making the radiator, the guy stitching the Connolly leather hide seats, and the guy burnishing the walnut dashboard. You can do whatever you like with the rest of the business, I don't care. So, it was top down, that's what we had to do, and it was a dramatic transformation. You look at an executive like Elon Musk. Now, there's a guy, honestly, you want to talk about a company that's transforming, it's unbelievable, regardless of COVID. So aside from the China trade war, aside from the COVID crisis, he's got a vision of what he wants to do, and he goes and he does it. He's gone into China, and they're the biggest EV player in China. He's gone into Germany, he's going to be building a new factory in India. So, these are leaders that drive transformative vision in their business and absolutely don't let anything come in the way. So, at a lower level in the organization, we talk about ownership of projects or work streams. Having a really strong owner who will break roadblocks, who will drive the outcome and make sure that it's cross-functional, they will work with their colleagues and their peers to make things happen. So for me, leadership is absolutely the fundamental basis, foundation for transformation.
Yeah. Moving on, just mindful of time. Michael and I, when we were writing the book, two of the most common challenges that we frequently came across and executives shared with us, and I guess their chief anxieties. One of which was, how do I get buy-in from my organization? So assuming you're not the CEO and top down, somebody that's within the body of the organization, how do you get buy-in? And secondly, how do you get funding, budget, and resources? And I think in some ways that can be aligned to a degree of discomfort in the company or reluctance around change. What sort of advice can Neil, can you offer around that, getting that buy-in and also the financial piece?
Yeah, it's a great question. Thanks, Graham. Look, I think it depends on the structure of the business, and this is where there is a differential depending on whether you're enterprise or scale-up startup, because there are different sort of levers you can pull to get that buy-in in my mind. And, if I start and reference my time at Roct, which was very much, we had the mandate for growth was very much there. I mean, you had to deliver on your growth targets, otherwise we didn't have a business. I mean, everyone understood that, but that was really critical. We had to get quick wins and not waste money. It was very simple. So you start to get that buy-in from the stakeholders, shareholders in this particular case, or the VCs who are funding us. You had to demonstrate that you knew what you were doing, and that was about credibility. It was about sort of getting those wins and not burning cash. And in our particular case, when we moved to North America, we could have easily, very formulaically put together a spreadsheet that said we needed, 20 sales staff, because that's what we had in the other territories in order to scale to the result we needed to do. If I put 20 people on in New York, having interviewed them and spent all that time, there was no way I would have delivered that. I would spend too much time dealing with problems. So we went straight for some key influencers and bought referral arrangements, I guess, with key clients. And it was a far quicker route to success, but also to gain credibility with the board and the VCs, which then got us to the next stage. On the flip side, more enterprise, more corporate, it's probably more being connected and, knowing if you've got a transformation office, knowing when the sort of either the CapEx cycle or the investment cycle is, and then knowing your value drivers and lining up with other functions who also had similar value drivers to see if you can actually sort of collaborate on getting funding and therefore credibility and buy-in. So slightly different ways of looking at the same challenge.
Yeah. Michael, from your own personal experience, do you want to chime in?
Sure. I think, certainly getting buy-in is not a general thing. It's a specific thing, and it's about people. I think there's a lot of different ways that you can get leverage in an organization with people. It depends a lot on what those people are like, their personalities when you're working with them. When you're working with sales teams, they tend to be pretty extroverted and use a lot of positive emotion to get people on board. You might have people in organizations that are motivated by safety or security. Some people are really open, in which case it's about working on a solution together. So, not always having the opportunity to take a top-down approach, even within a department, to be able to collaborate with colleagues and peers and to be able to, use those, to get that sort of interpersonal leverage to be able to gain support is really important organizationally. And I think the other thing often a lot of consultants, they'll refer to this, there's this influence model, and they say some of the things that you need to have in place to be able to influence mindsets and behaviors, which is really akin to getting buy-in, are having that compelling vision, adapting systems and processes, making sure you got the right talent, and then role modeling from the top. So I think, if you're pulling on levers in each of those 4 areas, you're going to get some momentum and you're going to be able to get some support for what you're doing. And the aim is to keep building that up.
Very well said. That's exactly right. Look, I'm very mindful of time, so I didn't want to waste any time getting to the sharing with the delegates before the end of the session that Michael and my book, Changing the Game, is being published through Wiley, as Michael has mentioned. We'll be publishing in July, and we would love as many delegates in this event to get a copy into their hands. And if you're interested in doing that, we would like to offer you 20% discount when we launch. And in order to do that, if you can just go to that URL, hopefully you can see it. It's ctgplaybook.com/CTO 2021. And I'm sure we'll be able to circulate that URL after the event. So I think I'm right in saying we're out of time. I'd like to thank Adam, Neil, and Michael for being a fantastic panel. And thank you for your attention. We'd love to stay connected to the delegates today. So please reach out through normal channels, directly or indirectly, and we'd love to continue the conversation. Thank you.
Thanks so much, guys, for that, and thanks for joining the event and sharing those insights with everyone, and being so collaborative with one another in the discussion. It was fantastic to hear everything. So really appreciate that. And everyone, as Graham said, if you do want to get a copy of their book, we'll make that link available to everyone, and we'll circulate it around post-event as well, so that we can share that out as well. So thanks, guys. And we'll have a break now for 20 minutes, and we'll come back at 3:10 for the last two sessions of the day. It's been a big day, but we've got two more great sessions coming up. So join us back at 3:10 on the dot for the next two, and we'll see you then.